Recently, major global oil producers agreed to take a record amount of crude oil production off the market. Does this mean you should expect stability in global oil market? And is it time to invest in oil stocks? Hey guys, welcome to the channel. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and all things finance. If you're new to the channel and finance is your thing, consider subscribing. In this video, I will discuss the current state of the global oil market and try and answer the question whether you should be investing in this space given the massive sell-off. Let's start by discussing how the oil patch works. Oil is treated as a commodity, and like most commodities, the fundamental driver of oil's price is supply and demand in the market. Oil supply is controlled by a cartel of oil-producing nations called OPEC. Demand is driven by everything from cars, airlines, cruise lines to industrial production. If you're an economics major, this will sound pretty straightforward. As demand increases, the price should go up, and as demand decreases, the price should go down. Pretty simple, right? Not really. OPEC, or the Organization of the Petroleum Exporting Countries, was formed to negotiate oil prices and production. OPEC controls 75% of world's total crude oil reserves and produces 42% of world's total crude oil output. There is also the OPEC Plus, which includes OPEC members plus high oil exporting non-OPEC nations like Russia and Kazakhstan. Combined, they control over 50% of global oil supplies and about 90% of oil reserves. With such a massive control on supply, OPEC has the ability to influence prices. Remember economics, by increasing or decreasing supply, OPEC can push the price of oil up or down. In the recent years, OPEC's monopoly over oil prices seems to be in danger. The discovery of shale oil in North America has helped US achieve a large volume of oil production. Indeed, America's oil production was $12 billion per day in 2019, making US the world's largest oil producing country. Also, with Canada, China, and Russia increasing their own output, OPEC is becoming limited in its ability to control prices. So what is the oil crisis everyone is talking about? In 2020, International Energy Agency warned that global oil demand will fall due to the pandemic. It was expected that OPEC will reduce supply to keep the oil price stable. As part of the negotiation between OPEC and OPEC Plus members, Russia was also expected to cut production. However, Russia did not agree to the deal since they were expected to bear most of the cuts. This led to an all-out price war. Saudi Arabia and UAE decided to increase production by 40% and 30% respectively. With abundant supply and lowest demand on record, oil prices have plummeted to $20 a barrel. US shale producers are hit the hardest. They need oil prices to be at least $40 a barrel to meet their debt obligations. There is this theory online that this crisis was fabricated to run US shale producers out of business so OPEC can regain control of the oil price. I have no clue if this is just a hypothesis or a fact, but this is what I read online. On April 9th, OPEC Plus, along with G20 members, agreed to cut production by 15 million barrels per day to limit the supply of oil. Does this mean the crisis is over, and because the supply is reduced, price will stabilize? Maybe we should invest in beaten down oil stocks. Or should we? With most of the global transportation and energy consumption under a standstill, analysts predict global demand will decline 20 to 35 million barrels per day. It's likely going to take at least until the end of 2020 or beyond before global energy consumption returns to normal levels. Even if the economy restarts, it's going to take a while before we work through hundreds of millions of barrels of excess oil. Demand and supply equilibrium is not expected in 2020. With lack of demand means oil prices is not going up anytime soon. What does all this mean to an investor? Many US shale producers need oil to be consistently about $40 to $50 per barrel to meet their debt obligations. Whiting Petroleum recently filed for Chapter 11 bankruptcy protection. More are expected as independent oil producers run out of capital. Everyone in the ecosystem is impacted: upstream or oil producers, mainstream or transportation and pipeline companies, and downstream or refineries. Even the heavy hitters like Exxon, Chevron, and Shell are facing the impact. Based on where we are, here is my 2 cents. With global economies in shutdown mode, energy consumption will stay low. Even if we get our hands around the pandemic, it's going to take at least a year, if not more, for transportation industry to get back to full capacity, which means demand is not expected to go up anytime soon. With recent production cuts as part of the agreement, OPEC is not expected to cut more. All of this means oil prices is not coming up anytime soon. Investors may find independent oil producers as a viable investment opportunities, but to me it feels like a value trap. Based on my research, I've decided to stay away from this sector, at least for now. For me to invest, I would like to see demand turn around and oil prices to be around $40. Having said that, if you really have to be in this space, here are a few names I would suggest, primarily because of their strong balance sheets and their ability to weather the storm. Exxon, Chevron, Phillips 66, Concho Resources, EOG Resources, Diamondback Energy, and Pioneer Natural Resources. Of course, do your own research. I think it will stay really ugly for a while before it gets better. Okay, that's all I have, guys. Thanks for tuning in. I really would love to hear your thoughts on this topic. If this was helpful, hit that like button. And if money gets you going, consider subscribing. Stay safe, and until next time, peace.